guys, so we Poms are at it again. This time Governor Bailey, who came out and said, and I quote, my message to the funds involved and all the firms is that you've got 3 days left now. You've got to get this done. The essence of financial stability is that it is temporary and it's not prolonged. So markets didn't like that, and we can see that certainly in the pound. The price of the pound was looking good until he started to speak, and everything went pear-shaped. So I'm actually short the pound, and I've got my stop loss at break even. But interestingly, the UK 10-year bonds didn't do much at all, and overnight bond market was relatively subdued, closing unchanged and still at the highs. So I'd expect more of that to come, but we do have looming in front of us, and let me just get the exact time, is the US inflation numbers, right? And that is due tomorrow night, 9:46, tomorrow night at 10:30 our time. So we've got just over a day and a half until we get the US inflation numbers, and that's going to create more pain. So where the US dollar goes from there will be interesting, but there might be a bit of buy the rumour, sell the fact happening, in that the market expects a hot number. Hot, by what I mean by hot is that it's going to be a high inflation number. With all the commodities actually coming off, I wouldn't be surprised if it's low, if it misses the mark, if it's lower, and that would be a sell for the US dollar. So if it comes in lower than expectations, it would be a seller's market. Let me just get the number. So the market is expecting 8.1. Right? So if it's under 8%, and I wouldn't be surprised if that's the case with the way the commodity market's been going, then you want to be selling the US dollar. If it's anything sort of 8.2 or higher, and the higher it is, the more aggressive the move's going to be. But I think the market's expecting a higher number, and certainly it is pricing in that direction. When we go and look at the bonds, the market is expecting higher rates, and therefore I would kind of expect that the market's pricing in a hotter inflation number. So to me, there's more risk to the downside, and that the US dollar becomes a seller's market post the inflation numbers tomorrow night, which is not what I want, because I am long the US dollar here against the pound. I would love to see inflation at 8.5%, and then my trade to come home and all my fundamental analysis to be proven correct. But what I want and what I expect is not what the market's going to produce, right? Never presume, never assume, and don't let your ego get in the way of the trade. So that is why I've moved my stop loss to break even here. As you can see, I can't lose on the trade, but I can certainly lose the profit that's already built in. Today I think it's going to be a pretty choppy day as the market, for the next 24 hours, as the market sort of gets prepped up for the inflation numbers, given any other headlines like that Bailey idiot, well, I shouldn't call him an idiot, but the unexpected sort of commentary from the Bank of England governor. Given that we don't get any more of that sort of crap, price should just probably trade sideways. Stocks notably weaker, and so they should be, as we're heading in towards a global recession. And I think that's about it. Commodities we looked at a little bit weaker. Copper not doing much. Oil coming off though. Gold certainly peeling off. And that's where we're at. I'll see you next time. Thanks for listening.